Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, November 2nd. Mike Boutros with you on the horn. Good morning to you, Jay, Aurelian, Pete, Steve, everyone in the room. It's an interesting start of the week. Things have been a little bit slow, but we got major event risk on tap. So we have the Fed on tap later today, got the BOE on Thursday, got non-farm payrolls on Friday. We got the RBA last night. So there's a lot on the table. Some of the pairs have seen some more price action than others. On the menu today, we're going to go over DXY as always, Aussie, dollar Swiss, gold, euro dollar, Kiwi dollar, dollar yen, dollar CAD, sterling, oil, SPX, and Bitcoin. It's a full list today. Try to get through these as fast as I can as we head into the session here for New York. So first up on tap, here's what the DXY looked like. This update was back on the 26th. I really just wanted to highlight the move. And as you guys have seen, we've been talking about this major resistance level and the kickback from that level. Now, on the weekly chart, last week marked an outside weekly reversal. That was this candle right here. Ended up being an outside weekly reversal higher. It still failed, okay, at slope. And I showed you guys this yesterday in the webinar. Quick reminder for everyone in the room, this is the last SB webinar for the week. We'll go back to the regular schedule again next week, Tuesday and Thursday. I will be live tomorrow on Daily FX at 9:30 Eastern. So we can get a better view of these setups right as we head into the FOMC. Hope to see you there. We get back regular schedule here on SB next week on Tuesday and Thursday. That being said, the slope I showed you guys yesterday, that 2011 slope, is still on my mind, right? Former support, multiple tests, now resistance is still the level, okay? So the end of the story is unchanged. 94.47, 94.65 is still the level we need to breach to mark resumption for the uptrend in the dollar. And while typically this outside reversal candle would actually shift the focus higher, I'm still very cautious while below this key pivot in price. All right. So as we head into the FOMC tomorrow, that's the level we need to beat to validate a breakout in the DXY. Here's what it looks like on the daily chart. So the rally that we made again into the close of October failed right at the October open on Friday. Here's the monthly open for October. Here's the monthly open for November, right back into the October open again. Failure in a pullback. The key support zone on this right now for me is this 93.67, 93.72. That's what I'm looking for. If we are heading higher on this stretch, that support should be the max drawdown. Okay, so former channel resistance, turn support. It's also the 618 of the rally. It's also the August highs. Okay, decent pivot in price. So that's what I'm looking for the DXY heading to the US trade session over the next couple of days. If we do head lower, that's the level that needs to hold support. Initial resistance still 94.30. Need a break above 94.65 here to really validate the next move higher in price. Any questions on the DXY? As far as the Fed rate decision, guys, the markets are largely starting to price in that we're going to see them start to, essentially lay out the tapering process. We saw that the interest rate expectations have started to tick up. The inflation story is getting way out of control, in my humble opinion. So I do think that they're going to have to be a little bit more of a cautionary tone. Now, again, we're not going to get updated projections. We're not going to get updated, forecasts on inflation and growth and employment. We're not going to get any of all that. That's quarterly. Right now, we're just going to get the presser and the updated Fed projection and the updated commentary from Powell. Rohan says, gut feel we break after the Fed. Typically, Rohan, I'm always up for giving you my gut feel. Where we are right now, man, I mean, again, pistol to my head, I do think that they start to release at least the guidance for the taper. I think it's the elephant in the room. They have to address it. Now, Rohan, the markets have largely priced that in, and that's why I think it's going to be a tough play. My humble opinion, if Fed slams dollar down, it might be a fadeable event. I guess it'd be 93. Okay, so towards slope support, if you get a collapse in the dollar, maybe that'd be a nice area sort of for a reset for the resumption. If the dollar rallies on the Fed tomorrow and fails here, that might be also another fadeable event lower. Okay, so look, it's either the rally and close above this to give us justification for the resumption of the uptrend, or it's a drawdown and close below 93.40, again, to suggest that you're on the way lower. My humble opinion, again, is ideal scenarios, you get a fadeable event to the downside for a better opportunity to buy, closer to trend support. But Rohan, that means nothing. That's just my gut feel. I don't, front run central bank rate decisions, especially from the Fed, because these guys come out and they always have the potential to say some stupid shit that just completely, destroys what we were looking for. So central bank rate decisions with the commentaries, always, it's not going to be one of those trades where you get the release of NFPs, better or worse than expected, you make the trade. With this, it's always in the commentary. So thanks, buy a pullback if it eventuates. If we hold 93, okay, this is the secret sauce area. This was the reversal, the outside day reversal close that we made back here on September 23rd, but it's also slope support for the uptrend, and just lower, Rohan, is that 100-day moving average. So if we completely collapse, that's an area of interest for me on the DXY. Don't forget, this actually ended up being 2 equal legs off the high at 93.36. So if this is correctionary and that's done, we should be looking for the breakout. All right. Again, a closer look at the scalp. Nothing's changed on this. Levels remain pretty much exactly where they were on the 26th here. Any questions? All right, that is DXY number 1. I want to go into the last update here, which was for Aussie dollar. So I think I gave you an earlier one for Aussie from yesterday. Yeah, here's yesterday's update. Okay, so Aussie, we got the RBA and overnight trade. We were talking about a massively important resistance level here. I couldn't have made it clear. Big level, 70.542, just around that zone on the weekly chart. Here's what it looks like on the weekly. So you had the 52-week moving average. You had the 100% extension of the decline off the lows. You had the former swing lows and the opening range low for the year back in March. Right here, 75.42. We peaked right into it last week. Here's this week so far. So as you know, yesterday in the update, I was telling you guys as we were heading into the RBA, that's sort of the ideal scenario, that we see this major resistance level hold. Now, what did the RBA say? Was there anything like earth-shattering there? I don't think so. At the end of the day, they reduced, or they essentially said that they were doing away. They got rid of the yield control compression, which was what they were looking to do, but they're still going to continue to do QE. Okay, so you saw that RBA basically charged a nice little pullback in the Aussie. Here's what it looks like in the intraday, but first, here's the daily. Big resistance, 74.42, 74.56. Uptrend resistance, multiple fibs. That's the level that we were looking for. Near-term support was 74.80s. That just broke. Okay, divergence into the highs. We noted that yesterday. Price action with a higher high. The oscillator not confirming that high. And here's the exhaustive pullback. So I'm liking this. I do like it. I've liked it since yesterday. Here's what it looks like on the intraday chart. The RBA didn't even charge a tag of resistance again. It just broke down. So we've now broken this seemingly uptrend support. And the question becomes, what's the goal from here on the downside? So a near-term pitchfork giving guidance to the decline. Something like this. Okay, resistance, break of the 75% parallel. Here's support at the median line. This could be the pitchfork that we're going to work with. I don't know. I don't have enough conviction on it yet, but I did want to show it to you. And what does this suggest? Well, basically suggests any rallies from here should falter at the objective weekly open, and that's 75.06. Near-term resistance, obviously a break above here, you're looking for the resumptive trade that goes up into 76 and change. But while below the objective weekly open at 75, I think you risk a little bit more of a drawdown here. A break below the median line, you're looking for the same level we were talking about yesterday at 74.13, 74.08, basic 38.2 of the advance, and the September 2019 high. Thanks. Or take profit a bit too early. Rohan, are you talking about Aussie here? He said, I took profit a bit too early. The turn was good. What's the play now? Wait for the recovery. So Rohan, again, I can't tell you exactly what to do, but my humble opinion on this, if you're not already in it, and you're right, the turn was yesterday on the RBA. Actually, you're taking a little off the table here if you're on the short, waiting for the recovery. Rally should be held by 75.06. So if this recovery gives you a little bit of a bounce and you do want to try to jump into that trade, your stop needs to be against the weekly range high, as long as you're comfortable with that. Next downside target's gonna be right into that 74 handle, just above the 74 figure. All right. Now, one other caveat I'll put on this, as clear as this looks as being a legitimate trendline break or a channel break, you can't forget, Rohan, that we do have the FOMC on tap tomorrow. It has the likelihood to really wash out any near-term technical plays, right? So tread lightly, okay? Tread lightly as we head into tomorrow. And again, we even get more information on Friday, guys, with the non-farm payrolls read. We've been getting really poor employment reads. Inflation is running hot. If we get another bad NFP number, man, it's really going to put the Fed between a rock and a hard place. Remember, the Fed's main mandates, their dual mandate, is price stability, i.e. inflation, which we could all argue is failing miserably now with 5% CPI, and full employment. And again, we can talk about the employment mismatches. We could talk about the issues that arise from the skill gap from COVID and people not being employed. We could talk about all that, but at the end of the day, the dual mandate is basically going to be turning lower if we see a bad employment print on Friday. So that's all to say, guys. Stay nimble. Stay nimble at the first couple of days of the week, first couple of days of the month here as we get through. Let the price action pan out. We get some clear definitive as we get into some of that major event risk later on this week. Any questions on Aussie? All right, so big turn from resistance, possibility for a little bit of a kickback here while below 75. Here's Swissy. Number 3, I don't have any open exposure on this myself, just as a disclaimer, but I did love what happened. It was a great opportunity that we missed with that last rebound. So our last update on Swissy was right here last night. I was talking to you guys about this 1618 extension. Jay, was that you? I'm not sure if it was you or someone in the room who pointed out this one, but the 1618 you love so much. 9090, we talked about it last week, actually in the last update back on the 10th, that this 1618 extension would be our last sort of target on the downside at 9090. Well, we bottomed right into it. We came into 9090 last night, saw a nice hold of support. Again, there's a lot there. Downtrend support, the 1618 extension, longer term uptrend support off the lows for the year. So super, super objective. One touch, 2 touch, 3 touch. You got that nice confluence at 9090, charged a nice rally so far. Okay, so you're about 40 pips off the low at this point. I'd be careful heading into the weekly open, and I only say that because the weekly open is the same as the September monthly open, which was 9150, which is the same as the 618 retracement of the advance off that August low. So you can see a decent pivot there. That's what I want to see, an inflection, okay? If this rally holds this level and kicks back, I probably want to bail on that. If we break, that would suggest maybe that you have a more significant low in place. Would that be out of the range? Would that be out of like the realm possibility? Absolutely not. Look at the strong divergence you got into the low. Price action with a lower low, the oscillator with a higher low. All right, so even if we drill down to the 2-hour chart, very, very similar sort of divergent marks. So look, at its face right now, all things held constant, you've simply made a weekly opening range right above critical support. Again, downside break below 90.90. There's nothing until the 90 handle, essentially. 90.18 is the August low. And you can even see that on the daily charts. Big, big way down if we break here. Here's Swissy on the weekly charts. I'm going backwards here, but just to show you the extent of the critical nature of this support level. In case that wasn't enough, here's the 52-week yearly moving average. Again, providing some support for this Swissy sell-off. Any questions on dollar Swiss? If we break, yeah, I see you. Yeah, if we break the weekly opening range highs, yeah, you're looking for 91.93. The reason I have that highlighted is because that, for me, is the near-term bearish invalidation level, right? So if we break above 91.93, you've not only broken a 38.2, but you'll also be breaking channel resistance and that 100-day moving average. So that's sort of my near-term bearish invalidation. 90.93, 91.93 would suggest you're on the way out for sort of a reversal pattern here in dollar Swiss. Questions on Swissy? Number 3. Okay, so the last update from that report from last night was gold. And I wanted to put a highlight on this. I put this out on Daily Effects yesterday as well. I'm really interested to see how this pans out, okay? Basically, we rallied into a major pivot zone into the start of the week yesterday, right here. It's the same zone that when we rallied back here earlier in the month, in October, we called resistance. We broke through it, tagged 100% extension off the low. Here's the pullback. Here's what gold looks like first on the weekly charts. All right, and then I'll take a drive down. I showed you guys this yesterday. 52-week moving average, perfect resistance, former slope support, a 3-point touch, perfect resistance. The focus range for gold is right here. 1750, essentially 1740 on the downside. 1825, 1850 is what you need to get the breakout. So you can see here, not really exciting time per se to be in gold. Here's what it looks like on the daily chart. All right, so again, 100 off the low is 1809. A 786 from the decline off the high in September is 1809. The rally failed right around 1809. We peaked at 1814 before pulling back. One other thing, I think I showed you guys this yesterday, but I do want to highlight that 2019 trend line support in blue there, right? Support, sailed through on both sides, break. It's now resistance. It's now resistance. So look, the gold trade is super tight. I'm neutral here, guys. If you have to put a gun to my head, I would say look for a dip down lower to buy, but there's no justification for that. Look, at the end of the day, this is the trend line I was looking to see the break. 1 touch, 2 touch, 3 touch was confirmed. We broke above it last week. If this trend line break is legit, like the pullbacks should hold right here. We gapped lower yesterday and pulled forward. So technically we didn't, we didn't break back below that slope, but that's what I'm looking for. I really want to see losses governed by that moving average, by that gradient, if this is a breakout. And again, 1825, 1830 is your next level. But right here, with the Fed on tap and non-farm payrolls on tap right into the open of the month, it's a gut check. I really think it's a tough call. Again, ideally, you get a decent pullback, maybe not 1757, which is kind of the cherry pick. Maybe it's a 38.2, which comes in just ahead. Something like this. Something like this. Another drop into 1778. But I do think with that rally into resistance, the risk is for a little bit of a setback first. Here's the intraday chart. Okay, this is the same pitchfork we've been following from last week, guys, from last month. This is the September lows. So what is this? For me, right now, this is simply weekly opening range, and I'm looking to see the break. A topside breach, like I said, 1809, 1830. If we break lower, that's your bullish inval. And the trade idea that I wrote yesterday was basically, look for downside exhaustion off of one of these two marks to fade. You need a topside pop above 1795 for that rally. So it still might be the play. I'm flat here just as a word of note here, but looking for justification to try to take this for a decent move. Rohan says seasonalities are bullish. Yeah, you have to be careful with the seasonalities, Rohan. I agree with you. I'm a big fan of looking at them and kind of keeping that consideration. But ahead of major event risk, whether it's a central bank rate decision or whether it's non-farm payrolls, take the seasonalities with a grain of salt. Once we clear that data, once we get out of this event risk, sure. But heading into it, be careful getting married to those seasonalities. Questions on gold. Testing resistance here today at 1795. Let's see how it pans out. A breach above 1809 is really what you need to see resumption for the broader uptrend. All right, gonna take a quick backwards move here and go back into euro, which is also completely off my radar right now. I think this thing is just ugly as hell. Here's what euro looks like on the daily chart, guys, or on the weekly, excuse me. It's a very similar scenario in that last week we marked an outside weekly reversal, but to the downside at the lows. That's oftentimes an exhaustion pump. That's actually not a bearish development. If this was an outside daily reversal or weekly reversal off the highs, that's a different ballgame. But as it stands right now, might be the exhaustion move actually. So that's the weekly chart. When things are like this on the weekly, I tend not to even touch it. So here's the daily chart. I'll show you daily first. You know, Friday's massive candle essentially took out almost the entire trading range for the month before settling out. Again, here's what the start of the week looks like. So even on the weekly charts, or the daily charts rather, there's really not much. I mean, I can't get excited about this. The momentum's at 50, right? Just below 50. It's not really a very strong tell. Here's the intraday chart. Okay. If this is a rejection of the downslope resistance, then we should find resistance again at what, 1620, right? In fact, if you take, again, this is real near-term stuff, but you take a retracement of this, the 618 is at 1630. So maybe this zone, for example, is something you'd want to consider as major resistance level, at least near term, for euro. Maybe an opportunity there if that holds. But from here, I mean, the slope, you're sitting right on the median line. You're sitting right in the middle of last week's range. You're not near the highs. You're not near the lows. Stay nimble here. Stay nimble here. I think euro gives us a better play later in the week. I'm not trying to press anything from these levels. Questions on euro? All right, that's number 5. Number 6 is Kiwi dollar. Another one where I'm just showing you what's happening here, guys, because it's a snooze fest in that we are simply in the range. Now we're testing the bottom end of the range today, and it could break. But the level or the whole focus for, if you guys recall, for Kiwi has been watch that big resistance. Right? There's massive resistance right here. You got the 2021 objective yearly open, the 618 retracement of the objective yearly range, the 100% extension of the advance off the low. One of the most solid resistance levels on the charts that we've viewed over the last couple of months. Huge resistance level. So I've been advocating for the short against that level. It hasn't really given us much. Here's what it looks like on the daily chart. Again, that cluster of critical resistance, 100, 618 yearly open. Look, we've been, what, almost 2 weeks trying to do something here? I tried to short a couple times. You squeezed out a little bit, but it goes right back into it. You squeezed out a little bit, then goes right back into it, right? Took like 3 break-even shots on this. So if this break is legit, a basic 38.2 of the advance converges on the median line near 70.80. And that's basically sort of the move I'm looking for here. So here's the bottom end of the range. We're testing it here right now. If the US breaks, great. I'm looking for that 70.80 level. I'd be looking to take the majority of the position off, if not go, break even. And one other thing, it's really messy and it's not going to be very clean, but just to show you a possible slope gradient again, highlights that 70, 80 level basically over the next day into that low. Again, I don't know that this formation is legit. We don't have enough touches, although median line support, upper parallel resistance looks pretty good. It suggests, again, you need to see a break below the median line for that run on 70-80. And with the same respect, guys, it also gives you a decent level for which to cap the highs. If you break back above the upper parallel, don't need to wait for 71.90. You know, at that point you bail. So we'll see if Kiwi has enough play here. Now remember, for this to work, we need dollar strength. And therein, my friend, lies the problem. So we'll see if heading into the FOMC, if we get a strong dollar position tomorrow, these are one of the setups I think I'd like to play a little bit more aggressively, right? Because we've been holding at these highs, major resistance for quite some time. Might be a decent pullback. That being said, guys, anything above 72.24 and you're looking at a major breakout, okay? Slope comes in at 72.50s. The next lateral level of significance comes all the way up here into the closed highs from back in January. That's 72.87. Questions on New Zealand dollar? Don't have any Kiwi data of date this week, so keep your eyes on the Fed tomorrow for this pair. All right, that's number 6. Number 7, also one that we'll be watching very closely heading to tomorrow, and that is dollar yen. I'm going to update this in a moment, but I want to show you on whole how this thing has been reacting, starting off with the weekly charts. So we've been talking about dollar yen on this major play here, just because of where this thing and how this thing reacted. So again, the weekly charts, we were talking about major resistance, right, for dollar yen. That level is 114.55 into 114.92. The 2018 objective swing high, the 786 retracement. In 2016 decline, huge level. You got the median line up there as well. We tagged it, okay, mid-month. Ever since then, we've been trading just below it. And remember, when that happened, we gave you the heads up right here on SB. We were like, yo, that's big resistance. If that's exhaustion, look lower. The last 2 weeks have continued just to hover below this key resistance, right? Momentum is threatening coming back from overbought. Remember, that's the signal. Especially dollar yen can stay in overbought condition for months if it wants to. So if we get the pullback below 70, that would be the indication, at least for a near-term topside exhaustion. Here's what it looks like on the daily. Okay, so for the last, you could say a couple of weeks, you can say that we've been sitting 113.30, 114.50, and that's the range that we've been in. Remember, we talked about this yesterday. If this is a break of uptrend support, we should find resistance at that slope before the move lower. So all things held constant, the way this broke looks like a break of support, testing it as resistance yesterday. That put the onus on a close below 113.40 to get the down play. Haven't gotten it yet. Okay, haven't gotten it yet. Yeah, you're pretty clear on dollar yen data too. So we'll be watching this one closely with the US release. Obviously, again, I'll bring your attention real quick to yields and what yields are doing. Here's the yields on the 10-year, right? You're still in that same zone that we highlighted yesterday, 154, 152. Resistance 163, 162. You're at support. Dollar yen, at support in a key range, right? Here's what it looks like on the intraday chart. So what I was showing you guys on this previous update was this slope as we headed back into that 236, which continued to hold. 1, 2 holds, okay, before rallying on Friday. So this was from last week. Now, once we broke back above that major pivot at 1387, 1378, here's the breakout. Open of the week, opened at the upside of it, tested it as support, broke back into it. Again, hitting the median line before rebounding. Are we going to stick with this slope? I wouldn't. You know, if anything, I might be interested in doing something like this. A little bit cleaner. Maybe take it to the high. Might be a play. I don't know. Again, I'm just messing with the slope, trying to get some action to the decline. All things held constant. An easy way to just to make things as simple as possible is just go with the slope. Okay. Slope resistance, a parallel to the lows, actually touches the lows, catches the lows, and again, keeps everything in check. If this is heading lower, ideal scenario. Again, very granular stuff I'm showing you here right now, guys, but I just want to show you how cool this setup looks like. That's the 618, right? Guess what? Here's your weekly open. Beautiful, right? right into the 114 handle. So 1405, 1407, that's what you need to see hold resistance if we are heading lower in Kiwi. There's no major Kiwi data on tap. Like I said, this is gonna be mostly the driver for the dollar. So heading into tomorrow, that's sort of my ideal scenario if you're gonna see a downside break in Kiwi. Questions on New Zealand dollar? All right. Or excuse me, on dollar yen. What am I saying? New Zealand dollar. On dollar yen. Okay, that's number 7. Number 8 here is dollar CAD. Loonie. So I'll be putting out a piece here on daily effects with regards to this setup, but I just wanted to give you guys the heads up. So here's dollar CAD, and remember what we've been talking about for the last couple of days is this, last couple of weeks, I should say, is this radical support zone at 23.14. That's the 2018 low close. Okay, we made it back in January. Decent pivot in price. You can also see the downtrend, parallel, support, inflection, support. Last 3 weeks, that's been support. That's all we've been focused on for the last 3 weeks. Maybe get a decent recovery off that. Still bearish, but on the drop, that's where you'd want to see a little bit of a bounce. So what does it look like on the daily chart? Here's dollar CAD on the daily. A little bit messy. What you see here, again, is that 23.66 level. I know it's kind of like a bane here, so I'm just going to go ahead and remove that for now, just to get this a little bit clearer for you. That's the 618. Again, a former swing low. Just forget about that. This is the range. Remember, we talked about this outside reversal candle we made off the low. That's a bullish call, and we talked about it. The last 4 times that we saw an outside day reversal off the lows, excuse me, has granted a gain of at least 1.4%. The lowest was at least 1.4%, which was right here. So far, we're up 1.7 off the low. So yeah, I kind of think this gets a little bit higher from here. Near-term resistance 24.22 and 24.40. That's critical, and that's going to be the level that would denote breakout for dollar CAD. Now remember, again, that's dollar strength. You're going to watch this one closely heading to the interest rate decision tomorrow. Here's what it looks like on the intraday charts. Here's what it looked like back here. Back on the 27th. So we had that near-term uptrend. I've removed it since in red. That broke, slammed right back down into that key support zone that we were talking about at 22.84 to 23.02. We talked about rally back into the upper parallel, and this is where we started off the week. If this break is legit, pullbacks should be governed by 23.65. Again, you need that close above 24.40. What I don't like is how this is reacting right here. Remember what I always tell you guys, if it's a break of hard resistance or hard support, we should see some run, some follow through. The hallmarks of a breakout is that cascade effect that clears out the weak hands, right? So guys who are short, who have been short, and they're looking for this trend line, this breaks, they start to buy to close out the shorts, and you want that cascade effect to give you the launch. This is kind of like, not that fast, and here's the pullback. Watch this into the US Open. Support needs to hold right here. If we are heading higher in dollar CAD, 24.40 needs to break to validate the advance. Okay. Now again, here you start to look for the possibility for some slope, some caveats, something to give you some clarity. I was working with this last night. I guess we can keep it on. It's the objective low, high, low. But the support basically was what I wanted to highlight continues to keep it constructive above 2360 near term. Again, 2440, stop traffic. It's exactly where the median line is. So if we're going to break higher, that's the level. Breakout target, that's pretty clean too. Here's your September low. So the levels are clean. My only problem on this trade is that we can't get any damn momentum on it, right? It's just been, I mean, this is the 2 hour, right? This is the daily. So hopefully we can get some sort of breakout, a momentum play. I do want to keep in mind one major thing, guys. We have Friday, which will probably be the biggest player for dollar CAD, aside from the Fed tomorrow, okay? Because we have, at the same time, we get US non-farm payroll employment numbers. We get those employment numbers out of Canada. So again, expect volatility onto this one heading into Friday. So that's sort of my mindset here on dollar CAD. If this breakout's legit, 2360 needs to hold support on this pullback. Rohan, I got SPX. It's on the list, brother. All right, so that is dollar CAD. Any questions on that? It's number 9. All right, next up is sterling. Here's what the British pound looks like. So finally got a downside break there. We loved it. I'm not in it any longer, but here's what it looks like from the weekly chart. So big resistance, turned ahead of downslope resistance, but last week was the second week that we tried to push through that 52-week moving average and then failed again. So we were sitting at support. The weekly chart wasn't very helpful. Here's the daily. We had ran into the 100% extension, clear move, 138.32. Failure 3 days there, and then we had the upslope, and once that upslope broke, we started to look lower. Key support 136.40 into 136.70. It's the 38.2 of the advance off the lows, and this is the objective yearly open. In fact, you can probably drop that 32 now. Here. All right, forget that. You're at support right here. This is the objective yearly open. Momentum, pretty much at 50, just below 50. Here's what it looks like on the intraday charts. And again, that's setup. There was the break. Remember, if this break was legit, we start to look for resistance along that slope. It went all the way back into key resistance, classic sterling move, and then finally broke again. So here we are muddling through. Again, I'm going to remove that 38.2. I'm going to bring up the 618. Again, just to give some consistency here. Divergence into this low. That's my problem. That's my problem. If this is a break of upslope support, that rally, we should be driving support for a rebound. This slow mutter on building divergence has me thinking you could get another washout, meaning you could get a rip. I was looking at this yesterday, as you can see. I was just trying to gauge where the 618 was. That gets deeper now to here, right? You could get a rip through. If you break the weekly opening range high, guys, that's also the median line. So if you break through this, you could see another rally towards 137.50 or so, but the ideal scenario is that you don't see anything above this, and we drive down lower into 35.70, 35.67, excuse me. It's the February low, real nice level. Oh, it's February low of 2020, no, 2021, this February low. You got the low here from back in July. You got the 618 of the near-term advance. That's right here. So bearish inval for the near term. Targets on the breakdown if we continue. Questions on sterling? Okay. All right. Last two, that's on my date. Let's jump on my list rather. Let's jump into I think it's oil at this point. Crude oil. Yeah. Awesome. So showed you guys this last night or last week rather as a possible formation for the crude oil trade, which had run into support and failed. That formation didn't really hold. Okay. Very long. Or am I mistaken? I'm thinking about the wrong thing. Yeah, okay, it is the same formation. We just adjusted it slightly from this high to that first high that we made back in October. So again, same move, right? Looks pretty clean still. Puts us in this pitchfork formation. So again, let me take a step back. I digress. Why is oil such a big level? Here is the weekly chart, and this is what we showed you for the last couple of weeks. The 9-week rally faltered right at the upper parallel. Recall that the last rally, which was 7 weeks, faltered right there at the upper parallel too before the pullback. I don't think you get a washout to this degree. Again, just my humble opinion, but I do think that the near-term focus needs to be for at least a pullback again to get long. Now, would I play the short? If you have a little bit more guts and you're looking at this really near term, you might be able to squeeze it out. For me, it's such a strong uptrend. I'd just be looking for the pullbacks to get long. So this is where we are on the weekly chart, right? With 3 divergent signals into this uptrend resistance. Daily chart looks like this. Uptrend resistance, 2013 low, 85.61. The 1618 from the advance has been offering support. That's 81.90. That's the break. Again, that would shift the focus lower for sort of the correction move in oil. But hasn't broken uptrend support yet. So for me to try to justify a short, it's just not there. I can't do that. Does that make sense? Too big a stop to short. No, I mean, again, Rohan, by my part, if I was going to take a position on this, I would just have the stop against the weekly high. The more aggressive stop would be against the high, which, in my opinion, would be way too far out. If you're taking a stop against this high, it might work. But Rohan, you have to keep in mind that this is a major pivot. So you could take a stop against that high and try to short it, and it will drop into support and then rip, right? So I'd rather take a stop like that once we've broken uptrend support, or once we've at least made a break of the objective weekly opening range where you get a downside bias. But right now, we don't have even justification on this. You know, this could just be false break of support, bounce, one more support bounce, and rally. So for me to work with this kind of slope, I do want to see sort of a buckle there. And a break of the weekly opening range low would certainly be the onset of that. Make sense, Rohan? But if you felt compelled to short, yeah, I mean, in my humble opinion, the conservative approach would be a stop against this weekly high. Again, most of the setups that we talk about today, guys, dollar strength will help. And that's the big caveat, is that you're heading into the FOMC rate decision and non-farm payrolls this week. So whether it's sterling, dollar strength will help. Dollar CAD, dollar strength will help. Dollar yen, I'm actually looking for the bigger pullback, so I'm not really looking at that there, but you get the picture. Dollar strength will help the Kiwi dollar pullback, right, which is holding a resistance range. So stay tuned and stay nimble. Okay, we got to get some of this major US event risk out of the way. So that is oil. Next up, here's SPX, Rohan, and here's what the SPX looks like. So it's been insane how this thing is just following slope so closely. I don't know if the weekly chart is going to do you any good here. Okay. So on the weekly chart, 46.17, the 100% extension from the advance off last year's low has been the level that we've been looking at. Watch this week's close with respect to this longer term fib. That's all I'm saying there. I'm also going to note that we have strong divergence on the weekly chart. That's not a reason to get bearish, but certainly something that would curb the upside appetite for SPX. So this is the weekly chart, right? Here's SPX on the daily, and I think this is the one that tells the most, okay? Basic yearly slope support, that slope, same as that slope, same as that slope, resistance, support, support, resistance, resistance, resistance. We still haven't broken above it. Intraday, yeah. On a closed basis, nope. We're right there. So look, I'm not going to say I'm necessarily bearish, but I am looking for a major inflection here. Meaning, if we close northbound of 46.13, you're all sloped from there. Here's what the intraday chart looks like. If you close above this region, you're all sloped from there. So here's the pitchfork I've been following off of the September lows and the October low. Median line, median line, took a parallel of that, extended off that secondary low. Nice resistance, pop through, but resistance again, pop through, resistance again. This is really granular stuff, guys, but this is how I approach these breakout trades because you're in uncharted territory. There's no previous price action northbound of 46,000 for us to take or get a gauge of a major high, a major low, reversal pattern, high day close, low day close, none of that. So it's all slope and it's all measured moves from here. So if we do break the highs from yesterday on a rally, slope comes in somewhere around 46,070. I'm sorry, 4,670, 4,670. If we break the gradient, more importantly, that swing low from yesterday, you have support at 445.70. That was the high day close that we made right into the open of the month before we broke. Actually, I don't want to necessarily stress that, but it's been a decent pivot. The bigger level is the previous record high. Okay, from back here in September, that's going to be 45.51. Comes in line with slope pretty well. Key support. Key support. Now, again, there's nothing here necessarily raging for a short, but I do think the exhaustion trade is upon us. And the top side, it could continue to grind on building divergence all the way up. But I'm just saying right now, I do think that the exhaustion is the risk. So even if it rallies higher, it might get a pretty mean washout. And what could be the catalyst? Maybe it's Fed, maybe it's non-farm payrolls. Both of those are on tap. Rohan, does that help on SPX? Yes, all right, you got it. All right, last but not least is Bitcoin. For those of you who are involved in this one, we are basically still holding resistance, right? So remember in pink, this is the 2020 October rally, which has been a decent parallel for this trade. I was trying to see maybe if we move it over a little bit, it gives us a better take essentially, but I like to be as objective as I can. So I'm gonna stick with this for now. You're constructive above 56,281. Big resistance is still 66,900, 64,900, 66,325. This is still huge. A breakout from here, and the levels are unchanged. Okay, so at this point, key support, bullish inval, a breach, targets, and targets. Here's what it looks like on the intraday chart. So remember that pitchfork I added a couple of weeks ago? We're still in it. This is just from the September lows, right? An embedded pitchfork. There was the median line at that key region of resistance. Look where the pullback found support. I couldn't believe this yesterday. Not only was it that 100% extension that we had eyed, but basically this low turned right ahead of the parallel, right ahead of slope resistance, or slope support rather. So here's slope resistance, again, converging again on this key level. This is pivotal. If we break above this, you're likely to see 77 real fast. Until we do, that's key resistance for Bitcoin. All right. That's everything on my list. Near-term support would be right here, 58,984. I'm still looking at that. That's the May high close. That's bullish inval, but that's near-term support. Yeah, I wouldn't be waiting for a drop towards 56,000. If it breaks 58.9, you're probably going to be in trouble there for a little bit. All right, make sense? Okay. All right, guys, that's all I got on my list. So if there are no other questions or trade setups, we'll go ahead and wrap it up here. Don't forget, I will see you tomorrow for the free session on Daily FX at 9:30 Eastern. I'll tweet out the link for you once we right before the start. And that'll pretty wrap it up for the week for me as far as the live presentations, guys. We'll be back on Monday for the free session, and then Tuesday and Thursday right back here on SB Trade Desk. I'll see you guys tomorrow right ahead of the release, okay? Make sure that you're staying nimble because, again, if we look through the bank reports and Bloomberg and some of the forecasts that are coming out from economists, they're all over. There is consensus that they will start to lay the framework for the taper. But the devil's always in the details. So we'll talk tomorrow right ahead of that release on Daily FX. We'll give you an update on what those setups look like, and we'll call it a week from there. Till then, see you tomorrow. Best of luck trading, guys. Cheers.